Alright, hello. Today's today's workshop will be regards the Ultima banking cycle tool. We're gonna go through the settings and explain applications and some examples, and what stands for what, and so on and so on. Basically, goal is to this is an additional tool to already launch Ultima Range tool, which basically gives us all manipulation cycles, and basically all the peak formations, previous range levels, open price, time rotation, and golden templates, and so on and so on. So this is basically addition, more specifically um, related to banking accumulation process mechanics and so on, with certain details of precision and so on. The main, so again, info section, you hover over, it will explain you each label, each setting, what it stands for and what it is. Basically, you can go through and we can see there is specific banking settings, which is first BT, which is bank manipulation timings. Let me remove this. Sorry. And so basically we go click this one, it will enable us banking timings. If you again the same icon, this one is the history. So if we want to do backtesting case studies, as you can see, it shows enables history. So if you enable history, it's gonna mark every single bank timing on the past. If you want to just live ones, it's gonna be the marked as the ticker line and the box. If the enable the history, it's gonna highlight the background. What is the bank timings? Bank timings is basically specific. It's half an hour window, like either half an hour or either hour. The hour will be these two because they basically there's half an hour, half an hour, half an hour, half an hour. That's why they will be hour windows. But each banking timing is basically related, either Europe central banks, London banks, Tokyo's banks, like basically Asia's, London's, and New York's specific bank timings, which part of them will be the rate adjustments, which will be the fixed rate, London's fix, Tokyo fix, and so on, so on, which will be the either fixes, either market open, like London's open, Frankfurt's open, New York's open, either option expiry cuts, forex option expiry cuts, which is like 10 a.m. for New York and Tokyo time. So basically it's kind of cluttered, like colors kind of irrelevant because I just marked like reddish colors is the basically related Asia's timings, either market close or bank close or fix or cut or so on so on. The blue ones I think it was related to New York's, and the greenish was related to London's. But there is many overlapping ones, like you can see this is a bit darker, so definitely it's overlaps because I know this is Tokyo cut and Frankfurt's open, so it's really significant that half an hour. That's London's open, significant half an hour. That's I think like Tokyo's or Sydney's close, something like this. Then here is the Europe Central Bank fix slash New York's open. Then first half, second half is the I think that the news comes out or a stock market opens, if I'm not wrong. Then over here we have I think 2:30, which is like stock market opens, and then by UK time 3 o'clock. This is the New York's cut, significant timing, and this is the London's close. Yeah, that's London close. Then I think this was Federal Reserve's either close or cut, or I don't remember, like something related that something related London's bank regards the Federal Reserve Bank. That's new day and relates to Asia as well. And I think there was Fedwire fix. Basically, something related to New York. If you go back, you will see many times how. So basically, what specifically we are looking for this half an hour windows. For this specific half an hour windows, we're looking two things. Either we are putting the low and then respecting that, or we putting the low before and then we sweeping that, right? So basically, I'm specifically looking, does in that window coming in or going out we have a manipulation. So basically, example would be probably here, like this huge manipulation spiking in this window. So basically I want to see high formed into the window after manipulation. Like here will be this 10 a.m. London's time. We might have maybe not best, some kind of smaller peak formation, or let's find some, maybe this is Asia's either fix or one related. So basically that at that moment is, actually let's switch on session break so you can actually we know that's the new day, the darker one, that's the new day. So basically at that point, okay, it's not the low of the day, but basically like this, I'm looking that if we come sweep and then basically that's half an hour, then next half an hour opens, right? We have open price, so we put low the half an hour, low the 15 minute respecting, right? So we have something like this, right? And same time we have this, right? Same like here, like this high in this window, we coming already from the high, which swept something from the left. Let's say we have peak formation high, peak formation there, we have high, and we say okay, we already, this swing respects and does this, right? Hi Patrick. So as well, like something like here, example, we have already high perfectly, we come from some huge high time frame peak formation, right? Manipulation, and then we have form, because this will be new hour, new half an hour, new 15 minute, that will be new hour. So we have hourly open, hourly time rotation, and this high respects the high, right? So like I said, either we are coming from manipulation respecting, or we, if it was like if there was window and we manipulated in that window. That's why I specifically interested in the bank timings on this specific half an hour gaps. like depend of the market pair. You know, in some European timings, you will see Euro and stuff like that, GBP moving, but like moving better in that timings. On Asia's, you might to see in Asia hours on bank timings they're moving better. Like this is USD GPY, and then there is Asia. You can see nicely coming in. Like in this one, like this is nicely like something like this sweep, and you reclimb and slow cap. Obviously there's maybe news or something, it goes quicker. But at the same time, like that's the low again, like in that specific new day timing, the low, and then you want to see like this in this window again, something is being manipulated. The time is on your side because bank does some adjustments and respects the low, so it's like gives you confidence regards that. Like I said, on this you can go and backtest it, right? Backtest it specifically. Like one of my favorite timings is definitely 10 a.m. New York's, especially for Forex. 10 a.m. New York's, like really important 10 a.m. New York's, which is what's called New York Scott. And then will be Frankfurt's Open slash Tokyo Scott. So I'll say from all day to specific timings. For me will be 10 a.m. and no idea what is the Frankfurt's Open in the New York. That's, I think, if London's Open is 2 a.m. that should be 1 a.m. So by London's time that's 7 a.m. and 3 p.m. which is in my view, like if I need to choose specific time of the day, that's probably what I would choose. Right, same time like the London's close, I think that's European Central Bank's close, and this is 5 o'clock London's close, as well as like significant timings, like these 3 significant timings where the banks high KF, where banks adjust the things. Like I said, like USD GPY, these 2 Asia's timings are really kind of key. And like here as well, like look, we have this timing, we come in, we put the high, and then if that's the high, in next timing what I want to see, some kind of pullback, sweep, continuation, right? And that's like you say, just some miniature like sweep, bang, push in, so it just kind of gives you, obviously we have this open price from this timing, then next open price provides us some time rotation. Here is an example as well again. So I'm looking in the timing, like I said, you want to see either sweep in the timing, or you want to see the sweep before and then mitigation of that sweep in that timing. It's kind of two ways you want to see. On this we come in, remember this is 15 past, so we have a hourly open here is the hourly open, here is the 15-minute open, and this already comes in respecting whatever low, sweeping, and kind of says okay in the timing, because you want to read in the context together with what context together with, like this timing, that's the 15-minute open, right? And then we have this hourly open, and we have what we basically sweep, right? So basically you can look something like this, right? So we sweep before time rotating higher, right? So we flip that 50-minute, flip that hourly, sweep, manipulation, time rotation, right? So that's kind of how we want to look for that. At that high, the low the row. Same like here, that's the low of the day at that point as well. That's what Frankfurt's Open slash Tokyo cut. Perfect. And then next timings I want to say, okay, we coming, we mitigate wherever we come from, you know, we use, we can use, range, adding manipulations, and then see, okay, does this mitigate the manipulation, or locally we have lower time frame, manipulation is like, okay, we swept, mitigated, again timings, right, comes, mitigates again, timings, like here we push already away, timings, right? So this already gives you, some confluence and stuff like that. It's like, again, pull back in, pull back in, pull back in. It's like nicely. It's never like it's never perfect. Like it's not gonna be exactly. But what this helps is like, okay, there could be volatility injection in that specific half an hour, right? Just because of banks, dealing with the business and stuff like that. So yeah, you, like I said many times, you will see, it could be like between or 15 minutes before or 15 minutes after that, because that's really specific. Like that's really that half an hour, 15 minutes before that specific timing, and 15 minutes after. But like I said, that's why we, that window, half an hour, the 30-minute window, like here, we manipulated. So if we manipulated, so we want to see this next 30-minute, right? So this swept 30 minutes, so I want to see this 30-minute respecting, right? Stuff like that. Like here, this one swept all this, and then this I want to see mitigating, starting going higher. Stuff like that. So that's regards the bank timings. And like I said, it's it's related to the market opens, market close, bank rate adjustments, option expiries, and so on, so on. And together with like open prices, manipulations, works absolutely perfect, right? That's what you want to see. You want to see that, do we manipulate, mitigate on that half an hour, and then you just pure confluence, right? So we push high, manipulated the weekly peak formation, daily peak formation, and like, and this window gives you nice manipulation, mitigation, anticipation going lower, right? Same as here, nice mitigating high coming, respecting that open, reclaiming, again gives you some kind of confluence and that time together, right? Here's the same, is manipulated high, reclaim, breakout, starting go higher. Here again the low, again between the timing opens new, bang, this push in, mitigates original manipulation, starts to go higher. So yeah, time and price kind of key level slash timing, again high, manipulation, push into timing, mitigation, drop, right? So beautiful, allows you to be more precise, and as well like filter out, there is maybe like, because this is like most of them will be quarter to hour and quarter past. I think most of these half an hour windows are 45 to 15 past. 14.5 to 15 past. There is some exceptions. This is 45. Yeah, this is 15 past. 45, 15 past. Because most of the timings are round hour, but I basically adjusted that, bank timing shows 50 minutes before and 50 minutes after that round hour. Obviously the New York ones is hour because there is two stuck together, two timings, so this is basically quarter to for open New York, and then it's quarter to hour later. but majority of them, that's why like ages ago when was asked regarding the kill zones, I was not really fancy about kill zones, just because they mark like from full hour to full hour, either that's 3 hours, whatever. I'm more like, yep, I know market opens in full hour, but I will be interested now 50 minutes before, 50 minutes after. Or if you want to instead half an hour, you want to that hour window, then from any market open or specific time, I would look for 30 minutes before, 30 minutes after, create the hour in that way, just because we know how significant the time rotation, right? And that time rotation will either be this or it's either be this, right? So that's why we don't start marking, because we can anticipate manipulation either before that new hour opens or manipulation after that new hour opens, right? So yeah, like as my favorite timings, like I mentioned, is like 10 a.m. and 1 a.m. New York's. This one and that one. This is usually use the GPY, but that's Tokyo cut and New York's cut and Frankfurt's open together with, I don't know, that's probably already equities open half an hour later. So that's basically settings regards the bank timings. So yep, that's bank timing. So next one will be, actually let's leave the history. XCT. X stands for fix, bank fix, and CT for cut. So basically bank cuts, bank fixes. Fixes is basically when the central banks adjust the rates. As you know, if you go to the money exchange and you want to travel abroad and you want to have a cash currency, you're gonna go to the exchange office and change to the local currency or something, right? And they rates in the banks and stuff will change once a day or twice a day. I don't remember. I think once a day. But basically that will be that bank cuts, like Tokyo cut, Euro Central Bank cut, New York's cut, and whatever. That's the time of the day when they adjust the rates. When they adjust the rates, for business, that means they need to adjust the books, right? If they busy, because what is the bank's business? Bank's business to execute the orders for their customers, right? If Toyota wants to, deal some business in Australia, they need to, execute for Toyota some business in Australian dollar, and so it means they need to adjust it. And that's mean when they adjust the rates, they execute, by the new rates, and that's why you're gonna see on the fixes, some significant on that fixed timings, some significant reversals. So over here, if we enable the cuts and fixes, so we will enable Tokyo fix, in Euro Central Bank fix, London fix, New York cut, and Tokyo cut. Cuts is only Tokyo cut and New York cut. That's specifically for these bank orders for forex option expiries, like I said, which is that 1 a.m. and 10 a.m. New York time. So let's first focus just on the fixes. So we have Tokyo fix, Europe Central Bank fix, and London fix. Basically, in New York, there is no fix. It's kind of when New York's market closed, like not more when the New York's bank, Federal Reserve Bank closed. That's when kind of they adjust. But that's already included with some other timing. So, but it's not so significant. The most significant fixes is London fix, Europe Central fix, and Tokyo fix. So, and you can see it's gonna basically mark that specific time of the day when it starts, and that level as the fix. The fix levels and cut levels is specifically for intraday, and as well like bank timings. It's purely for intraday. How you want to look at the fixes and cuts is basically how banks are dealing with the business during the day, right? So let's say, so green one was London's, blue one is Europe Central Bank, and red one is Tokyo, right? So let's say Tokyo market opens, and Tokyo market opens taking over from the London. Let's say London is here. So London is executing, London will, so basically each bank has some kind of price range where they will deal with the business. Basically, you have your customers who need to execute, and you'll say, okay, we are working with this price range, and we will execute your business in this specific price range. So basically, the how you want to look, it's in the banks, it's all about rebalancing the price, right? Rebalancing the price, and each bank will work on specific range. That's why, let's say this is Tokyo, and if Tokyo was working from previous Tokyo's price range to this one, so basically they will be executing the business, right? But then comes in London, Europe Central Bank, and they'll say, okay, there is some business left. So basically, the books is not closed, so let's work from this range to this range. Something like this. How I specifically look at the levels, I basically more interested, like I said, on the timings, not specifically on levels, because on the levels itself, will be, you can kind of make completely separate strategy, just looking how London's fixed and they adjust the rates, and okay, does they gonna appreciate dollar or hedge it? Because in the banks, it's all about hedging your positions. And on the study regards the London's fix, Tokyo fix, and not as well as Central Bank fix, on that paper, I think I shared on the off topic maybe. So basically it was how you can anticipate most kind of reversals on the fixes, right? When you have fix, before the fix, either dollar will be appreciated or hedged. Let's say, market been hedged up to this London's fix, and after London's fix, market start to be appreciated, like dollar, USD, GPY. Most banks deal only with USD cross pairs. Only USD cross pairs is like, the majors. All the rest of the cross pairs is just a byproduct from the main pair, right? But all the transitions will be in dollars. So basically, you want to see, okay, if the market gets down, so that's against the dollar, so dollar weak, that's mean it's hedging, and now if we are appreciating, we might to go higher after that fix, because banks need to adjust. Okay, if they've been hedged before, no, they might appreciate and go higher, and stuff like that. Or you can simply just look from level to level, okay? Because regards, I was mentioning regards rebalancing, right? If this Europe Central Bank open, and when they executed customer business there, so they have opened the market, right? So for them to close all this business, for them price need to come back, right? So basically rebalancing is like, because if they offering, if they selling, so basically selling whatever USD, USD GPY selling. So for them to close all these positions, they want to push the market back to that, closing the books, closing the positions, right? Not always they will close in the same moment, because banks has deep pockets. They can wait later on to come back and stuff. But pretty much you want to be careful when we have a new fix, new timing the fix, because you can anticipate some change in behavior, change in direction, right? Stuff like that. What I noticed, okay, I will cover that later. But basically, yeah, here you can go back and again see how the each fix, how price interacted. How I specifically look, like I said, when like I look together with the bank timings, right? So anyway, you can already see the timings because of the where it comes from. Basically, just in the context, we have high, we drop, we have new fix. This from this level, what we anticipate, either we go take off and go higher, or this fix will move in the same context, right? And that's mean, okay, from here to here, if European Central Bank was working with this range, they need to close books, they need to close the positions, their business. So we want to see price dropping here, so we know, okay, European Central Bank closed the positions. So what's the, let me remove that BT timing. Then next, okay, if we fall, who still could have open positions is like, okay, Tokyo Bank, yeah, Tokyo Bank, because look, market run our way, so it's mean there could be a lot of business open orders for bank to close end of the day, might to see price drop lower. You definitely don't want to blindly just trade fixed levels. Could be nice confluence. End of the day, what you want to target, it's liquidity, right? So end of the day, what you want to target, liquidity. In this case, if there was like something like this, it's like, okay, there's nice, resting liquidity. You can see there's nice pivot. So it could be some blandies, retest, maybe go higher, or just pull back and stuff like that. That's regards the fixes for each bank, for each central bank. When it's open, it's basically gonna extend all the way to next timing when it opens, and could be just strategy just by itself, adding some more of the confluence, entry deals with the low range, high range, and then targeting, okay, to go back, from level to level, retesting previous fixes and stuff like that. Same note, there is New York's cat and Tokyo's cat, right? These two specific timings and levels are Tokyo cat and New York cat, which is specifically for forex option expiries, which is the bank orders, like here, for only for these 2, 4, 6, 8 pairs, right? For only these 8 pairs has the bank orders from that forum spreadsheet, right? But the timing, which is that New York's cat and Tokyo cat, is still significant across the markets because that forex option expiries is really huge, billions and billions, which is big money. And like the Tokyo cat is the same timing as the Frankfurt's markets open, which is very famous for what? For manipulation timing. And many times some kind of textbooks, they could be where you have a Frankfurt opening and then it comes like, show me some example. Something, maybe something like this. Yeah, something like this. So you have so Frankfurt open, that's hour before London, right? You have Asia, then you have Frankfurt, and many times you will see break out of Asia, pull back into daily open / Frankfurt's open, and then moving lower. Here, yeah, we again basically adding New York's cut, Tokyo cut. You can go back and retest, basically do some case studies. Okay, how the price reacted. two things, like I said, what I keep an eye is again, what you want to see, you can just treat that as intraday key level, right? I will say inter-session key level. You can treat cuts and fixes as intra-session key level. So what do we want to see at the key level? We want to see what? Some kind of liquidity sweep, right? And some kind of miniature. We want to see liquidity sweep, and we want to see the sign of strength, sign of weakness. Reclaim the level, fail the level, right? So the example here again, we just treat as the context. High drop, fail the level, right? Push through, bang, failing the level. Same this, Tokyo cut, like the same mechanics as just standard open, right? It opens, we put the low, we put the high, we put the low, we break the high, we push in like this, push, pull back, push, right? That is what reclaim the level, right? Sign of strength. So this point, sign of strength, shows us start to go higher, right? Testing that level. So stuff like that. Same as here, we can see Tokyo fix, banks adjust rates, bang, money gets injected, bang, jumps out, and we can see how whatever blue one was, I think European central banks, everyone central, they adjust some business, their books are closed, so they don't have these ones as well, books are closed, so there is no reason for them to push market down. This level shows strength, this banking shows willingness to go higher, right? Creating this, and you just simply can work from level to level, and stuff like that. Obviously looking, okay, where was some last level important for banks to adjust, price level where they done some business, adjusting or whatever, and then just linking, okay, liquidity level could be nice inter-session kind of setups. One thing that I really noticed regards the cuts and fixes, you can definitely play around you can play around and look for some confluences, but basically, like, I noticed some specific timings which are when they are squeezed together with specifically is like, oh, they work very well. Like example here, the black and green, which is New York's cut and London's fix, which is basically 1 hour apart. So if we just New York's cut, London's fix, we remove them, leave these two, which could be like interesting to develop like for statistics or something, because if you just hindsightly go back, and you will many times you will see kinda, we have two, London's close, London's fix, and New York's cut, and you see this kind of behavior is like, many times markets start to trend from that, right? So it says, okay, these two price levels, whenever there was significant money injection regards the bank business, they come back, just mitigate and just push further, right? Push, fail the level, drops, right? Reclaims, push higher, bank fails. Just kind of what I just hindsightly noticed, like like really, like, especially when the levels are squeezed together. What does it mean? It means like it's been hold, that level, these two levels been hold, right? Like this is just beautiful, like this one, it's like something like this one is saying. So basically definitely you can go through and play around. New York's cut and London's fix, Europe's central bank fix, I think as well, is like 2 hours maybe prior New York's, so you might look at that as well. So but mainly I've seen this, which is hour apart, which is really interesting. Same time Tokyo fix and Tokyo cut, which is I think a part of like 7 until like 4 hours, 3 hours. So you will see they are wider apart, but when you see again them like squashed together, because remember that's, if we go in the beginning, Tokyo cut is basically when the hour before London's open, right? So what is it? That's end of the Asia session, right? Then Tokyo fix is pretty much when the, I think Tokyo fix is like middle of Asia session or kind of something like this. So this is 7, that's like 2 o'clock, that's like 5 hours apart. So if you see really levels together, what does it mean? It means we have a 5 hours apart, but that's mean all these 5 hours price done fuck all, right? Price chopped around and come back pretty much in the same place, right? So which means, okay, these two levels are holding the price at that point, and then if we, you know, see something, where was that example, like here, right, when they pretty much close and the price level again fails, like, and gets retested, perfect. Like, you know, we anticipate drop, we can anticipate drop, like here again, like look how this 5 hours price wasn't moving far away, and then we basically again sign of strength, sign of weakness, but instead like one level you just look, okay, if we fail, you can say the zone, right, is like, or you, right, reclaim it, is like that level, like here is like for uptrend, very very interesting again. Like maybe when it's like really wide, okay, maybe that could be really choppy day and there is not going to be much good trades, right? But when it's, so basically because these two levels will be instantly before London Open, right, or Frankfurt Open, so you can kind of like I said, this could be really interesting statistical tool, just objectively make some statistics, depend of the both levels, how wide are they, and you know what's the how it goes further, right? So that's this, and that New York's one with London's close, which was something I was like kinda interested. Same time, like you might say, okay, we, you know, reclaim that, it could be, you know, what's the statistics, maybe we never come back to when we breach both of them or something, I don't know. Again, like just food of thought for checking like specific pair, specific session, you know, behaviors. This is specifically, yeah, Tokyo, yeah, like for Tokyo. That's fixes and cuts. If you go there, you can see XCT, all bank fixings and cut levels. Bank manipulation timings, that's BT. TKYX, Tokyo fix, Tokyo cut, Europe central bank fix, New York cut, London fix, and so on. So with this one, we just disable everything, whatever we had there. And as well with history, you can disable, it's gonna only show the last ones, enable gonna show the pass for the backtesting. Then in the same note with the actually Tokyo, and actually I'll keep the Tokyo cut and New York's cut, and then what is this, USD-GPY, enable USD-GPY. So let's cover instantly regards the bank orders. So regards bank orders, to be able to see them on your chart, so basically I shared the link in the Discord where you can get the announced published bank orders every day. So basically example will be in that forum. Every morning guys sharing bank orders, which looks like this kind of chart visual. You can see there is 2, 4, 6, 8 8 pairs. Only these 8 pairs has a bank orders. What's the bank orders? Bank orders are forex option expiries. So basically, institutions, banks, whatever, puts the anticipation. This is USD/GPY. USD/GPY. Where is it? Over here. Over here we have only one banking order level. So basically, what does it mean? It's it's level with the option expiry of 426 millions. Sometimes you will see like huge like 1.4 billion, 1.3 billion, 1.4 billion, 1.4 billion, which is horrendous, like really big ones. There's, I think, a biggest I seen like 4 billion or something. So basically, in USD/GPY we have a forex options expiry at 150, right? So you don't know, does they put the calls or put the puts? So basically, what they means, it means they saying by, so this this forex options expire by New York's cut, which is by 10 a.m. New York's time. So basically, what you want to, how you can use this. So you see, okay, today is Monday, and for USD/GPY we have 150 institutional bank level, right? So basically, how this ties in with regards institutional levels, because if you know, like ICT or Stacy, they use round numbers, quarter numbers, half numbers, and whatever. I never felt fancy with regards them, because you have a level every 25 pips, 50 pips, 100 pips, whatever. This makes more sense because this is institutional levels where we physically know there is a option expiry for banks of 426 million, right? So I know this level is important today for USD/GPY. So what I do, I wake up in the morning, I open the forum, I check, okay, what levels we have today there. So I can see 150 for USD/GPY. So basically, now we have ability, okay, I open, I enable USD/GPY, and just put 150, right? Over here I just can put 0, so I don't have that level. So 150. So now it's gonna load in on chart. It's gonna show me 150 is basically up here. You can see on the morning I add that level, just make a label a little bit larger. So I have this level on the chart. It says, yep, bank order 150. If you so it says at that price level. So basically, if you have another pairs like many levels, you want to add the two closest levels, two closest price levels, one above, one below, right? And then basically what I will look do by that for option expiry, do we have does price interacts with that level? Basically, I'm looking interaction and specifically manipulation and specifically high the range, low the range at that level, right? And so basically, how it works on that specific day, people says, okay, by 10 a.m. the price, they basically, I don't know, like in my view, it's like, on the morning you bet, okay, does by 10 a.m. live price will be above or below. That's where they use calls or puts and basically betting that price will be above, below. But we don't know, is that, so basically what they are like kinda betting is gonna be below, above. I don't care that. I need to know, okay, we have a interest of institutional level this, and if it's in today's price range, pretty much in this today is like pretty far, so it's not been, if there was on this list, like let's say, level of here, so what you can do, you can click on that and you can easily drag as well. You will drag, and you maybe instead like editing, you just can drag and see why I made that. So basically you can utilize this, you can change bank orders to whatever. So you can say support and resistance, right? And you can use these levels as well, not just as a bank orders, but you can use as a whatever support, resistance, and or if you have some significant yep, if you have some basically use these bank orders as well as application for for your another maybe key levels, and you just can add whatever you want, and it's gonna show you, and you can move them and stuff like that. So that regards the bank orders. We can actually have a look maybe quickly. Cut this on Aero just by curiosity, because we have some nice. So basically how it would look for, so by this time, if we had some levels, so what we had there today, we had on Aero, so what range we are, 193, pretty much 1900, which is all the way down here, and then 95 is all the way up there, which is too far. So basically between 900 and 995, so 1995. Get rid of this, so it will be level here and level up there. So basically again, on the morning I would enter these two levels, so I will have one level here and one level here, and then just basically, okay, if the price goes up and there is interaction, I will know, okay, there is institutions who either gonna defend that level and try to price to run away, or they're gonna try to push that level up to that 10 a.m. so price is either above or below, right? So that's how we're basically using. But these banking order levels after 10 a.m. after the New York cut starts, it's worthless. It's like there is no any significance. These institutional levels are like very significant up to that, right? And like you said, many times I've seen like something like this where we have a level here. 10 a.m. is like, look how perfect. Like absolutely this low of the day forms when? At this bank timing. New York's cut. Perfect. It doesn't mean there was, bank order. Maybe that day bank order was up here. But what I need, I just like, okay, I have an interaction with that institutional round number, that banking order here. And I was like, and we're rejecting. So what does it mean? It's possible that institutions are, better that, okay, live price by 10 a.m. will be below. So what happens, probably we basically reject, we have interaction, it's like perfect, only that's what I need. I have a confluence in the institutional money, billions sitting there, and they want to reject it, and they just run all the way down to the 10 a.m. right? Like perfect. As soon 10, we appreciate the dollar, this was the hedge, and now we appreciate it going against. And that's how you basically we using that. So that's regards the bank orders and stuff like that. So basically you can add 8 pairs, 2 levels each. If there is more than, if you want to add more than 2 levels, like for Aero, like you've seen on that chart, you can see like today for USD CHF, NZD and Euro GBP, there is none of the levels. So basically if there is many and you say, okay, I want to put all of them, or prices maybe really close to like 3-4 of them, you just simply can this Euro, and you can say, okay, just change Euro USD, and you can add okay, add 4 levels, let's say, if you want. But as well, like I said, you can use this if you want for specific, because these levels will only appear of the ticker you choose. That's it. So that's regards banking orders purely for intraday up to 10 a.m. New York cut. And it's same linked with bank timings, with the cuts and fixes the levels. Then the next part is the overvalue, undervalue, and fair value VWAPs. So we can go maybe just daily. So you will see we have a, maybe let's go higher time frame so it's easier to see. Let's say weekly. Can do. So what's that? It's basically three types of the VWAPs. So if we go sweep from VWAPs, you can change. So let's change one by one. So weekly, let's leave the fair value, which is basically the standard VWAP. What does this mean? It means like here we have a new week starts. As soon new week starts, it marks the standard VWAP, right? What's the VWAP? VWAP is volume weighted average price. Basically, it's institutionals are utilizing as a fair price. Doesn't matter what the price action, they know the fair price where institutionals interested is executing at that VWAP. Why? Because that's the average price for average sales buys. That's the best price they can fill the bags, right? And that's why you many times you will see, you know, we have nice interaction, because that's the fair price. And banking institutional algorithms utilizing the VWAP, and VWAP is as a benchmark for like algorithmic trading. That's, you know, best price wherever the price is. Whenever price comes back, that's the best price for the, it's not too expensive, not too cheap, right? It's not, it's basically the fair value between buys and sells. So we definitely want to keep that one on it, so we have extra confidence to see if the bulls or bears is in control. Basically, you know, rejection, reclaim, and so on. So that's basically fair value VWAP, which is basically standard VWAP, which starts from, you know, new week, new day, new month, whichever time frame you're utilizing. Like here, weekly. So it starts every week, starts from beginning of week, or moves, calculates the average price by end of the week, like here. Then we have a undervalue and overvalue. For this one we have two options. Either you leave the cloud or either leave the level. If you leave the level, it's gonna be just a line. So let it load in. Yep. So basically how that one is marked. Let's make some maybe this is nicer. Anyways, let's take the current one. Okay, today's one. So Mondays will be the same as the daily, right? So basically overvalue, undervalue VWAPs is marks not from beginning of week, but every time we have a new low of the week, high of the week, high of the week, you can see high of the, so basically overvalue is marked from high of the week. Every time we reset high of the week or we make new high of the week, it's gonna start to draw that overvalue. Basically, why it's overvalue? Because that's the best price from the high, right? That's the best price over value. So remember, if that's the low, that's the high. Fair value is the middle. That's the fair value. Everything above is overvalue and everything below is undervalue, right? So either premium or either discount, yeah, the same thing. So basically the best, so basically anytime you can execute at the Viva, because that will be okay, the best price for buys or sells. But from overvalue, that's the best price you can get from high of the range, right? The best buys you can get from low of the range. It's basically anchoring VWAPs from high of the week, low of the week, low of the week, and every time it resets. If we go back here, we have high of the week, we start to draw high. We have high of the week, we start to mark high. So basically what this means, so basically if this is institutions who are responsible for reversing market, they're not gonna chase the price, right? They're not gonna jump here. They say, okay, Same as fair value, they will wait when the algorithm will wait when the price comes back to the VWAP and execute buys or sells. Here's the same principle. From the high of the week, if that's the institutional responsible for reversing market, they're not gonna jump they're not gonna chase the price, but they will say, I will wait for aka fair value from the high, which is basically they will wait when the price comes back and they will execute here. Wait when price comes back and execute here. So basically same from the low, right? From this low, we push, price runs away, we wait when it comes back, reclaims strength. So we know institutions are in present because this low is respected, price interacts with the level and bang, pushes higher. Whenever price starts to go against opposite high of the range, aka over value VWAP, that means we're starting to put heat on these sellers, right? Because remember, this is average price from the highs, from the sells. So whoever sold here, average price, they're starting to be in drawdown averagely, whoever sold here, right? Same as here. So whoever bought here, averagely buying price is this one. And as soon we drop below, we're starting to put heat on all buyers because on averagely they are starting to get drawdown here, right? Because we are under the low of the range on the value VWAP. But what I like to see reclaim, push, offer that really discounted price, reclaim, because this is like from low, from high, that's the best price at the VWAP or below. It's basically cheap, right? Higher at the high of the overvalue or higher, that's the really premium for sell, the best price for sell, best price for buys, right? Same as this deviation is the best price from the low for the buys. So that's regards the just a level. I really like to use the cloud. Why? Because it's marks not just the VWAP from the low or VWAP from the high, but as well adds the 50% retracement from the high on current move. So as an example, so from this is high of the week and price start to moves down, we are tracking that 50% as the separate line, like here, right? Price moves all the way, we keep that 50%, we keep that 50%, and we basically make a cloud between overvalue of the top of the high of the range VWAP and high of the range 50% retracement. Why? Because I'm utilizing this as my strike zone. Basically, I'm like from this low, so I will be interested in this cloud as my strike zone for my best positions to fill. Way before I was constantly chasing price to trying to get as much as positions in. Now I will be okay from this low. If this low is true, I want to see price manipulating, aka stop hunting in the cloud, or even better, right? I want to be filled in my strike zone. I want to be filled in the cloud because that's really discount, that's really undervalue from this low, right? So I will look like, simple manipulations, mid-manipulation engulfments, looking for entries. Again, manipulations, looking for entries, manipulations, looking for entries. So I'm utilizing cloud as my strike zone from the low or from the high as the first confluence. Second will be manipulation levels. So basically I want to be filled in my strike zone and as close as possible to that manipulation levels, right? How it's beneficial regards, because like from this is like, okay, the institutions are starting to buy here, we want to see buying coming in here in the cloud, right? Either it's just touching the VWAP or it's gonna come into 50% from the high to the low, right? From this low to high, that's the 50%, right? What is the, again, it's similar like ICI, same thing, impulse, correction, retracement, healthy retracement 50%. We want to see that, buying to be present for impulse correction, impulse, right? But at the same time, the benefit from the high and from the low on the overvalue, we know that sellers will try to be present in the opposite side, right? So basically, if I'm entering here, that's my strike zone. I know I need to manage the risk as soon we approach opposite side, right? Because there could be interaction from some sellers, and that's what we can see, right? We bang, we push, so buyer steps in, push to the 50% from the low, from the sells, bear steps in because that's their strike zone, bank push price down, again buyer steps in, seller steps in, buyer steps in, starts put them in the drawdown, right? Starts put the heat against the highs, and we reclaim, invalidate the high of the range, and starting put heat, and you know it's most likely we will take that high out, right? And again we take that high out, we reset the high of the week, and again absolutely beautiful strike zone, right? We have high, we run away, we push into the strike zone, sweep. Does we sweep? No, we don't sweep, we just make double top kinda, bang bang, and sweep with this. Again push lower, push in, strike zone at the cloud or beta. Where the fuck was it? At the cloud or beta. At the cloud, again, what do I want to see? I want to see rejections, right? I want to see failing the level. I want to see some kind of sweep, time rotation. You know, that's my strike zone. That's what I'm gonna look for. So that's regards the overvalue, undervalue VWAPs, and you can, like I said, by default daily, weekly, monthly, and you can use in multi-time frame and really see, you know, when you enable multi ones, like many of them, you will see how colors disappear. Like there was daily, now it just shows weekly, because if that VWAP will be same as that one, it will show the highest one. So now you can see how so basically what the VWAPs, how the VWAPs helps you. VWAPs helps you because remember guys, that video, that workshop where we spoke about range development, how the new day starts, new week starts, and how that we from that open price gonna develop, right? Still reach some kind of monoplate high, monoplate low, and then comes back to that developing 50%, that open price, and then you're gonna start to trend, right? VWAPs really helps you with that completely same approach to visually see how the range is developed, right? Because it's constantly marks that, you know, new month, the new August, you know, we make high, we make low, that's the August open, right? We push up, we come back from the undervalue and start going higher, right? And look, from this drop from the high of the month, we dropped all the way to the undervalue VWAP, rejected. From the dailies, rejected. Again, push again from the monthly, right? From the monthly, push all the way where? To the weekly / monthly, dropped where? 50% retracement from the low to high. That's exactly 50%. Again, monthly VWAP, monthly, weekly, and so on, right? Again, you can go back and do some case studies, you know, backtesting. But for me, it's like really from that highs, lows, a lows, like, okay, you know, if that's through high, I want to see, you know, that's new day. We have some overvalue on the daily, overvalue on the monthly. So from this point, I know, okay, some buyers might to step in here on the weeklies, like, because that's the low of the week when buyers start to kick in, right? And that could be hold on. Oh, Jesus Christ. And that could be where some buyers could be stepping in. And that's exactly what happens. And so on, so on. Here's the same. Have the day, have the week, invalidating weeklies. and we dropping level all the way to the monthly low. So that's regards overvalue, undervalue, VWAPs. I will say one of my like really game changers for my entries. And I think that's kinda it regards rest of the settings. Labels, just changing the label sizes. That's history, that's the cloud one, as we said. And if we just go again in info, blah blah blah. Colors, no like color coding already enabled next to the time frame. Yeah, that's regards the banking cycles. Basically, it's covers specific mechanics how banks, institutions accumulate their positions. Over undervalue, that's will multi-time frame perspective. It's not just intraday. Banking orders specifically intraday for expiries. Bank timing specific hours of bank timings in business related execution orders and so on. And yeah, I think that's pretty much it. Any questions, guys? You're welcome, guys. Welcome. So yeah, I think that's it. Wrapping this workshop regards the banking cycle. We have already one regards the range cycle, manipulation cycle. I'm working at the moment on same visual for market structure, doing some changes and stuff, which is then makes kinda easier. I really hope it will be done by Wednesday. If so, then if done by Wednesday, then most likely Wednesday we will have a workshop regards the market structure cycle and stuff like that. So yeah, that's it for today. Thanks guys for joining. Later on we'll upload the video, and yeah, thank you. Take care guys. See you in the chat. Bye.